everybody. Thank you for joining us, especially on this rainy day. I know it's always fun to get out of the office and get over here on a rainy day. My name is Grace Rain, I'm Executive Director with The Conductor. And for those of you who aren't familiar with us, we're a public-private partnership between the University of Central Arkansas and Startup Consulting. And our mission is to empower entrepreneurs, innovators, and small business leaders. We do that through events like what you're going to see today. We do one-on-one consulting. We have an SME network that Michelle's actually part of. And then we also have the Innovation Center, which is the building that you're in right now, where we provide co-working space and meeting space for startups and small businesses as they grow. And so really we're here to just lower barriers to people starting and growing business. So today we're going to be talking about financial finale. So getting those end of year money matters in order. We have Michelle Phillips here with us today. As I mentioned, Michelle's part of our subject matter expert network. So we actually have subject matter experts that come in and do office hours here at the Innovation Center and also virtual office hours. So you can, if you just love Michelle so much and you want more time with her at the end of this, you can book with her in future months and get either in person or time over the phone, because she's a wealth of knowledge around financial information. So I have no doubt you'll want to book some time with her, but you can do that online. And we can send you information on that. So a little bit about Michelle. So Michelle actually was a CPA for a number of years and had her own CPA firm, still a CPA, but had her own CPA firm for a number of years, working with small business owners. She recently sold that to a sabbatical and now is a commercial loan officer for First Security. So she wears multiple hats and has a lot of background and knowledge around the financial realm. And so she's going to share a little bit today about that. So I'll turn it over to you, Michelle.
Thank you. Coming on this not very pretty day. Appreciate it. Do y'all realize tomorrow is December? Oh my goodness. So when you guys think of year end, what do you think about? Not just business, just in life.
Stress.
What?
Stress.
Yeah. New goals.
Oh, yeah.
That's
That's what I meant to say.
running around for holidays. Holiday stress. Time off, family, running out of time. So it can be a little bit overwhelming because it's like everything's coming in on you at once. So, I mean, yeah, you've got family gatherings, Christmas, money issues, all the things. So it can be very overwhelming, but it's also a very important time for your business. So it gives you the opportunity to step back, evaluate your business and the finances, and also prepare for the new year. Planning. We all love planning because everybody has so much extra time. So, you know, as much as we don't want to hear it, the more we plan and do throughout the year, the easier it's going to be when it's time for year-end business, everything, tax everything. So the first, say, let's know some due dates and plan accordingly. There's lots of due dates, you know, whether you're a small business, mid-sized, large, whether you have payroll or not, there's just a lot of due dates. Thankfully, we have the, technology of the calendars and reminders, so we're going to see a slide with all of our due dates, but I also wanted to point out two things. When you file an extension for your tax return, that does not extend the time you get to pay your taxes. Your taxes are due April 15th. So you say, well, I haven't done my taxes. How am I supposed to know how much I owe? Well, that's where the planning part and having your books in order comes in handy so that you can have an idea of what you may owe. But a lot of times people are like, oh, I'm just going to file an extension. I'm not going to worry about it until later. Well, just know that does not extend the payment time, and you could incur penalties and interest for that. I've wanted to say this for 12 years of having my business, and I never felt comfortable saying it. And it goes whether it's an accountant, an attorney, anybody, your friend, anyone. Your procrastination is not someone else's emergency. Yeah, that's a big one for me. It never fails. Yes, everyone is very busy. Everyone's busy running their business, small business owners wear multiple hats. And the financial side sometimes falls short on spending time there. But just be courteous of others' time and just know that they're very busy too. And you may have a whole month of work ahead of you. So just because you need it tomorrow, don't expect that person to be able to drop everything and work with you. Due dates for businesses. This does not include all of the payroll reports. So if you have payroll, that's kind of a whole other beast. But January 31st, you're required to have 1099s and W-2s sent to the recipient. 1099 NEC is non-employee compensation. So people contractors who are working for others, if you're paying them over $600 a year and they are not incorporated, you are required as a business to send them a 1099 reporting their earnings for the year that you have paid them. So it's kind of like a W-2, but for contract labor people. So those have to be sent to the recipient by the end of January, the end of February. They have to be sent to the government agency. If you e-file those, you get an extra month. March 15th, big deadline. If you have an S corporation or a partnership, which is S corporation is Form 1120S, partnership is Form 1065. Those business returns are due March 15th. If you have, or the extension. So I kind of got ahead of myself when I said about the extension information. So you can file an extension on March 15th. You can file an extension for your personal by April 15th, but you need to make some payments if you have any tax due.
So if we're an LLC that we file an S corp, that would be the March 15th.
That is
date.
correct. Yes.
Okay.
And that's why I put those form numbers up there so that there was no question, because there's businesses that may just file on your personal return. If you're an LLC and there's only one owner of the LLC and it's not elected to be taxed as an S corporation, then it's just gonna go on your personal return and you have that April 15th deadline. So it's a great question. And y'all please feel free to type up questions at any time or comment. So April 15th, C corporations, Form 1120, that's due, or the extension. May 1st, franchise tax payment and the report is due to Secretary of State. September 15th and October 15th, for those tax returns that got extensions in March and April, those returns are then due September and October. For individuals, it's similar, but individuals, if you have to pay in quarterly estimates, so a lot of times if you're self-employed, or if you have, if you're owing a lot, when you do file your tax return, then you will most likely be set up on quarterly estimates. And those are due January, June, September. This one did that. January, April, June, and September. So the fourth quarter 2023, the last estimate of 2023 is due January 15th of 2024. And then you have to turn right back around and pay your first quarter for 2024 by April 15th. So that hurts a lot of people because they're having to pay their tax due for 2023 by April 15th. And they need to be paying their first quarter payment by April 15th, first quarter of 2024 payment by April 15th. So if you haven't been planning and you're not expecting to have a tax liability, that can be a very stressful time. When your accountant calls you and it's like, hey, you owe this for 2023 and you need to pay X for 2024. So I've got the estimated tax payment due dates up there. April 15th is the personal tax return due date or the extension. And then October 15th is when the personal tax returns that have received an extension are due. I'll also just quickly say that a lot of times people kind of get freaked out by getting an extension. And I've heard like every scenario possible of why people don't want an extension and why they do want an extension. And I don't think it matters. Some people feel like, oh, I'm gonna have a red flag if I file an extension and I'm gonna be looked at. No, that's the last reason probably that they're gonna have a red flag. There's plenty of others. That calls red flags. But, so if your accountant runs out of time and isn't able to get your return prepared, just know it's okay. It's not gonna hurt you. Pay whatever tax you think you may owe and move on. Okay, bookkeeping. At this point, you're either gonna have to review your bookkeeping for the year, or you're gonna have to do your bookkeeping for the year. So if you've waited to do it, and there is no right answer for how you do this. It depends on your situation, the size of your business. If you're, you may be keeping it on QuickBooks, or you may be keeping it in a box. That's okay. If you're keeping it in a box, please do not take that to your accountant. Because they're charging you by the hour. And there's, that would, most of them will say, okay, I'll do it, but your bill is fixing to be reflective of that. So much better for you to spend your time organizing and sorting through all of that than to just dump it onto the other. So however we're doing this, whether it's through a software or whether it is by hand, we want to be sure we reconcile all accounts. So that's checking accounts, savings accounts, credit card accounts. Credit cards always kind of get forgotten to reconcile. But it's important to reconcile because that's where we find mistakes, where we find things that maybe were forgotten. So again, it's fine to do it by hand. It's fine to do it through QuickBooks. If you don't know how to do it, you need to have someone show you or have someone do it for you, whatever your preference is. Very important. It's going to find errors. It can find transposed numbers. It can find numbers with too many or too few zeros. It can also find duplicates. So it's always important after things are reconciled. It's like once we hit 0, we're reconciled, we have a party. But there's outstanding items. So you want to look at those outstanding items and think, are they really outstanding? Or do I have it entered twice? Or do I have it accounted for twice? So big deal. If you had a $10,000 check to a vendor entered twice, and you didn't notice that, and you didn't notice that it's still hanging out there, outstanding checks, makes a big difference to your bottom line. So that's my reconcile. Very important. I know it's old school, simple, but so important. Inventory. If your business has inventory, please do account at least at year-end. Depending on the business, depending on the inventory, you may need to do it monthly, quarterly, but definitely I would do it at year-end. Accounts receivable and accounts payable. Accounts receivable is what your customers owe to you for work you've already done. Accounts payable is what you owe to your vendors. So if you're using QuickBooks or some kind of software to keep your books on, you just want to make sure that your receivables and your payables are accurate. Maybe there's a receivable in there that you billed in March, and in December, they still haven't paid you. You've called them, you've talked to them. You're thinking you may not really be getting that money. go ahead and write it off, because if it's in your receivables, it's in your income. So that would be, profit, the income that you're paying tax on that you haven't received. So you just always wanna make sure, go over the detail of what is included in your receivables and payables to be sure that it is accurate. Loan balances. Please don't guesstimate. It can be important, like when your accountant calls and says, I need all your loan balances, and you're like, oh, I think it's this. Please call. That's all it takes. Call to your bank to say, I need my 12/31 balances of each of my loans and how much interest was paid during that year. We have found, I've got Shelby McWin is in here too, and we worked together for 6 years, and she's still doing taxes and has practice, so I'm preaching to the choir here. But we have had to ask that so many times, and it slows down the process of your books and your tax return. And we have found errors so many times by actually getting the real numbers from the bank or whatever financial institution. You may be paying off of an amortization schedule and you're adjusting to that and you think everything's perfect. That's great, but everybody makes mistakes. The bank could have made a mistake and not posted your payment to the right account. That's where you find that. So always a good idea, once a year, call and actually get your balances. Looking for expenses paid personally or with cash. So, ideally, if you were keeping your business books in QuickBooks, it'd be a great idea to also keep your personal books. That makes it a lot easier because then you can kind of reconcile the two, or you can have a quick report to look at to kind of just go through and go, okay, did I not have my business credit card with me that day that I had to go to Lowe's and put it on my personal instead? You're not going to remember that if it was back in March, but if you have something to jog your memory, such as a receipt or seeing a large charge on your personal account, that can help you remember and make sure you get credit for that on the business. We try, we always preach about keeping your business and your personal separate. Absolutely, but sometimes that just doesn't work out that way. So you always want to just go back to your personal and see if there's anything that you haven't picked up. Really no way to catch the cash receipts unless you're truly going through your receipts or you have some kind of way of finding that. We go back to the look for the expenses paid personally. Also on that, keep in mind mileage, cell phone, home office. So mileage, I mean, if you're not, and we could do a whole thing on auto expenses, but if you're not paying for your vehicle and your gas through your business, then you want to make sure you look at what your business mileage was and have that accounted for in your business, whether that is you making an entry or your accountant making an entry.
And that's for what if the business is paying for?
If the business is paying for those expenses already, you're covered. So it would just, unless you have a business vehicle, but you also have a personal vehicle, and sometimes you use the personal vehicle for business. Depending on how often that is, it may not really be that material. So, I mean, in all of this, you have to kind of step back and go, is it worth it? So don't stress yourself out trying to go, oh my gosh, I have to get my mileage in my home office. How much is it really going to be?
Is there a specific form that you would fill out and claim that these are business use vehicles? Or
On
how
the
do you
tax
claim
return,
that? Or
or-
do you say that if they were to go and come to us and say, this vehicle, and I say, well, it's a business vehicle, how do I claim that?
So if it's a business vehicle, then really it should be like 100. It's not necessarily 100%, but Majority, your true, if it's a true business vehicle that is used only for business or majority for business, then you just take those expenses and move on.
Just, interest only on those costs?
No, that would be any expense, so maintenance, gas, interest.
But as far as the payment, it's not the payment, it's just the.
That is correct. That is correct. And you actually can take interest expense on your vehicle, business wise, in addition to the mileage. So if your business is not paying for your vehicle expenses, bring that up with your accountant or just know there may be something there that you can take additional. Yeah, mileage, auto use and home office is always a big topic. It can get very detailed and confusing. So just ask about your specific situation to someone. Also on that, talking about not getting too bogged down with the details, cell phone. You may have a family plan with 5 kids and you and your spouse. So don't go through all your cell phone bills trying to add up how much was business. Just split it by how many phones there are and take something that is reasonable. And keep that in mind that IRS, if you're ever audited, they're looking for, is that reasonable? Does that make sense? So as long as you're able to show, yeah, I'm reasonable, you don't have to get bogged down in the detail of it. S Corp officer payroll. So that S Corp is S Corporation. That's a whole, the officer payroll is a whole topic on itself, but I just wanted to touch on it for everyone to know that if you have an S corporation and you are taking money out of that business, you're required to pay yourself a reasonable payroll. Reasonable is very subjective, so it depends on your business. It depends on the profit, how much money is staying in the company, how much you're taking out for payroll for personal use. But there also has to be a reasonable amount. If you're taking payroll and you're taking distributions, you don't want your distributions to be 100,000 and your payroll be 20,000. We got to make it because IRS wants those payroll taxes. And so you have to be reasonable, and your accountant can help you figure out what is reasonable. Very subjective and a lot of details could go into that, but it's also very tailored to what's happening with you in your business. So evaluating your year, understanding your financials, very important. One, I'll tell you, your financial includes your balance sheet, your income statement, and your cash flow statement. All 3 of those reports make up your financial statement. And I would encourage you that if you don't understand those 3 reports, that you get with someone who can explain them to you. You know your business better than anyone else. I can go through and see every transaction, everything that you've done for the year, but you know why. So if you don't understand what that report looks like and go through thinking of the whys, you could be missing out on opportunities to do things differently, to make corrections. So very important to understand. Conductor's offering a great service to where your people can come for free to talk with the subject matter experts. So you've got that opportunity to not have to pay anyone $100+ an hour and be able to sit down and truly understand your financials. And don't be embarrassed. I don't care if you have been in business for 1 day or 10 years. Please don't be embarrassed to ask. you're not alone, I promise you. Oh, back on the understanding your financials, whether it's with financials or tax returns, it's great to talk with your peers, your neighbors, your friends, other businesses about how things are going. But please don't take their word as the gospel of that's how it is. It may be a certain situation that works that way, because everything with taxes and financials is so detailed and so many rules. So they may not be comparing apples to apples. And just because they've been doing something and never been audited, doesn't mean they've been doing it correctly. They just haven't gotten caught. So I've always told my clients, you can do whatever you want until you get caught. Then it's a whole different story. So the accountant's job is to guide you so that you're not in that situation. Reviewing the business structure. It's just, as we're evaluating our year, it's a good time to possibly review that business structure with your accountant, with your attorney, just in general. Is it still, do you taxed as a partnership, need to file an election to now be taxed as an S corporation? Do you need to get rid of all of those entities and just be a sole proprietor? So whether you're moving forward or not backwards, but whatever the change is, whether you're growing or downsizing, it's a good time to evaluate your business structure. Making purchases. Don't buy it if you don't need it, please. So we would always have people in December calling, I need to go buy a truck, I need to go buy some equipment, do you need it? Because you're spending this amount, you're getting tax savings of this amount. So sometimes it doesn't make sense to do that. And a lot of times people say, well, I'd rather pay such and such than to have to pay the government. I get it, but you also want to make smart decisions with that. So it's a good time to look at, do I need to go ahead and make some office supply purchases or a vehicle or equipment or whatever it is? Just be sure that it's truly needed and you're not doing it only for the tax savings. Consider donations, charitable contributions. Also consider and talk to your advisor, or accountant, whoever, as to whether you're actually getting any tax benefit from those donations. You aren't, most of the time, people aren't doing donations just for the tax benefit. They're doing it because it's a good thing to do. But the tax benefit does help. But now that we have a donation, whether it's from your business or from your personal, is going to be an itemized deduction, and you may not even be itemizing. So it may not even matter. The time to look at funding your retirement. Again, that's such a specific deal, but that's just something that you want to have in the back of your mind, and the end of the year is a good time to check on it. It's also a good time to review your actual versus budget. Hopefully, maybe you had a budget at the beginning of the year, and so now it is a great time to see where the differences are. Not only where the differences are, but why. And again, you know your business better than anybody, so that's going to be a good thought process of, oh yeah, that's where we had to do those additional repairs that we hopefully don't have going forward. So good to evaluate. And of course, evaluating your goals, which a lot of this ties into planning for the following year too. But if you're not taking the time to truly think through all of these things, then you're not going to start your next year off on a good foot. Evaluating your team. We can't forget our team. So what staffing needs do you expect? What do you have now? What changes are needed? The compensation of your incentives. Are there, possibly get creative. What does that team member truly value? Is it time off? Is it money? Is it flexibility? celebrating accomplishments and improvements. We get very busy and sometimes it's easy to bypass that, but we all need it. We all want to celebrate what we've accomplished or improved. And that doesn't have to be a big deal. You don't have to, give them a trophy or anything. Just, even if it's just a note or a word of encouragement, just to, so they know they are seen and their accomplishments are seen. Performance reviews, important. They stink. It's not fun, but it's necessary. And then, whether that's good reviews, things they need to work on, very important. Gathering feedback from your team. That's why you have them. You want their feedback. You want them to say what they feel is working and what isn't working. Suggestions. I know when I had my firm, I wanted all the ideas because I don't have them. Also, a good time to have your employees review their W-4. The W-4 is what they fill out at the beginning of employment that has their name, address, social security number, and how the taxes are withheld, how much taxes withheld. They can change that W-4 anytime throughout the year, depending on your company's policy. Some companies may say, oh, unless there's a life-changing situation, you can only do it once a quarter. But most places, you can change that at any time. So you just always want to make sure that their information is correct, especially before you provide that information to your accountant or before you prepare W-2s. Evaluating business processes. What's working? What's not? So that's just your daily processes. What's going on in your business? Back up your data, computer, contacts, any important files. Again, we get busy, and before we know it, a whole year's gone. The older we get, the quicker it goes. Also, a good time to evaluate your accounts receivable and your accounts payable policies. Like I said, that the receivables are dealing with your customers, the payables are dealing with your vendors. The terms, and that goes on both sides. You want longer term if you're paying somebody. If you're being paid, you want shorter terms. So depending on what your policies are with how you pay people and with how others pay you, you might want to try to get that adjusted. Late fees. Are we going to charge late fees, or are we going to just be patient and hope we get our money paid to us? Are we incurring any late fees? Can we put policies in place to be sure we don't incur late fees? Discounts for early pay. A lot of times companies, your vendors may offer you discounts if you pay 10 days early, pay within 20 days instead of 30 days. That can be significant, but you've got to plan and your cash flow has to be there, which is also a good idea to have a line of credit. I can help with that. Credit card fees. Decide whether you are going to accept credit cards. Are you going to pass along that 3 to 5% charge from the credit cards? Or are you just going to keep that as part of doing business? So just going through your policies to see what's working and what's not. Evaluating your vendors. Verifying their information, their tax ID, their address. Evaluating the contracts and relationships. It's not fun by any means to have to look through that, but while you're evaluating everything, you might as well add this to it. But their payment terms, price points, how's their customer service? Are they providing what you need as far as service? Have they been accurate with your orders, with whatever the situation is? Reliable, timely. Also with that, would be, do your vendors, are your vendors also your customers? Or are they doing business with your competitor? So that may just be something to consider. Your vendor may have absolutely no need to ever have your services. If that's the case, that's the case. But it's always nice, you want to do business with people who are also doing business with you. Customer appreciation. Just like we can't forget our team, we can't forget our customers. Could be gifts, notes, phone calls, personal visits. Doesn't have to be anything elaborate by all means. It could be a handwritten note or stopping by to say hi for 5 minutes. But just to let them know that they are appreciated, they're seen, and they matter. It's also a good time to review your public image. Website, social media, your Google listing. I recently had someone tell me that they have a small business and their Google listing, I'd never even heard of this, had been delisted. So when people searched for their type of store, they were nowhere to be seen. They had no idea. It had all been fine. No idea how it happened. But thankfully, they had a friend tell them, hey, I can't find you anywhere. So if you're not doing this regularly, then definitely do it at the end of the year, because that can have a major impact on your income. Other ways, on your website, click on every link to be sure it works. Send yourself a message from your contact us page to be sure that that's working okay. Call your numbers, evaluate your hardware and your software. Is it time to make a change with anything? This is the part everyone hates. Other than the bookkeeping.
I have a quick question about hardware. Is
Yes.
that something that should be included, like as equipment on your
It depends.
inventory? Like, what is the amount?
So inventory,
Or not inventory, but like,
fixed assets,
yes,
it depends on the amount.
okay.
So,
What is the
typically-
amount?
There's no magic.
Cool.
It depends. Typically, we would normally say 1,500 and above. Is it still 1,500? It depends on who you talk to.
Okay.
There's some people that'll throw a $10,000 something in expense and move right along, but it really, if it's a larger amount, it should be a fixed asset and depreciated. So yeah, that's the hard part with finances and taxes. There's very seldom a definitive answer. It's usually it depends, which is why it's so good to have a relationship with someone you trust and are comfortable with. So all tax documents. If you don't look at your mail all year, please look at it in January. It makes everybody's life so much easier. You will receive your tax that you're supposed to receive all your tax statements by the end of January, but still look for them in February. Investment documents usually don't come until later, so you just have to keep an eye on them. But any tax documents you receive, your 1099s, if it says tax document, save it and take it with your information to your accountant. I said access to QuickBooks, but whatever software you're using, if you're using a software, if you're able to provide access, that's amazing, because then your accountant has all the information and can see what was going on. If you don't provide access, you can do remote login, you can bring them a backup. I've had people that bring their entire laptops. That's okay too, whatever works. It's fine to print the reports. That's fine, but your accountant's probably gonna have questions. And so that just skips that step of having to go through and ask questions, and we have it. If you do provide reports, I would recommend that you provide the entire detailed general ledger. So that is showing you every detail of every account. So if you're not comfortable providing access, that's a very good option. You can, a lot of times you can export that to Excel, send that to, and then the accountant's able to search and sort, and so that's a good option. If you're not using a software, again, that's okay. But either summarize it the way the accountant would like it, and you may have to ask them that. It's fine to put everything in Excel. It doesn't have to be anything fancy, but it will save everybody time if it is organized and sorted. We talked about this some, the loan balances, the interest paid, your accounts receivable balance, your accounts payable balance, and your inventory account. So all of that information would be as of December 31st. Your estimated taxes paid, that was those quarterly estimates that we were talking about that you may or may not have to do. If you are paying estimated taxes, please look back and make sure of the date you paid them and the amount that you paid. We had every single year so many IRS and state notices that came in because we didn't have the correct amount of the estimated taxes paid. Because we may give you vouchers with your tax return that has $400 a quarter payment, but for whatever reason, you may have ended up paying $1,000 a quarter, or we may have changed it when we did some planning. So it's just, it helps everybody out if you will double check the date and how much you pay.
I have a question, I asked it for a friend, what if you haven't paid estimated taxes?
It's okay. If you, so
It's
even
okay.
if, even if you, are required to pay them, if you don't, you're not gonna get a letter, you're not going to,
You just owe it at the end of the year.
you, plus penalties and interest.
Oh, that too.
So that's that required part.
If you're required,
If you're
if you're required.
it depends on your tax liability the previous year, and it depends on your profit that year.
And I would assume they would send a letter that says, no, of course. Cool.
No,
Cool.
is that something that your accountant will tell you?
Okay.
Yes.
Okay.
And so we always provided the quarterly estimates when, so like if I was preparing your 2023 tax return, I'm going to provide your 2024 estimates at the same time as I provide you your 2023 tax return. So it is based on your previous year's tax liability, but it will also depend on your current year situation too. If you didn't have, if you had zero tax liability the previous year, and then this year you had a great year and you owe goo gobs of tax, you're not gonna have a penalty for not paying quarterly because it's based off of the prior. So, good idea to let your accountant know that, so that you can go ahead and start paying in if you're having a great year, because again, if you wait until April 15th, it hurts to have to come up with that big amount right then, plus the first quarter for that current year. Necessary changes to employee information. Again, if your accountant is preparing your W-2s, it's gonna save everybody a lot of time and money and energy if you have the correct information. Comparing your income to the 1099s that you receive. So again, everybody makes mistakes, small business, large businesses, we're human. So it's always a good idea to, you know, you don't necessarily have to do it down to the penny, but if you get a 1099 from someone that has been a customer and it looks like it's thousands of dollars off, it's time to check that out. The information for your 1099s that you're sending to other people. So it's best practice to have anyone, your vendors who are not corporations that you anticipate you're gonna be paying more than $600 a year to, If you're able to get them to complete a W-9, which just provides their information to you, name, address, what type of entity they are, and their ID number. It's a lot easier to get that as you're handing them a payment than it is in January when everybody's busy, or December.
We typically say before we pay them that we have to have it before we release the paycheck.
Best
Otherwise, we won't
practice.
get it.
Yes, exactly. And then there's times, you know, when you do call to get it, they know why you're asking, and they're like, I don't want it to 99. Well.
I don't wanna pay that.
Exactly. And if you don't file the 1099s or you miss someone, it's not the end of the world. IRS has bigger fish to fry at this point, but it could result in your business not being able to take that deduction for whatever you have paid them.
But once you as a business submit your 1099s for contracted employees, you submit it to them by the March deadline or whatever it is, right? It's then their responsibility to file it under them, like, you're not, as a business, we're not held.
For that
to-
person
for
to
that
put it on
person's
their,
taxes and.
Absolutely.
That's on them.
that is completely on them.
Okay.
Is there an amount that you need to be paying before you really like should be sending someone a $10?
Over $600 a year.
Over 600.
Yep.
So $599.99, you don't have to.
That's right. And if they're a
Just so you
corporation,
know. Never.
if you're paying a corporation, you don't have to send one. Not sure why, but this rule. Settlement statements for any real estate transactions. If you have purchased or sold anything, please provide settlement statement. Settlement statement is what you get from the title company. That's got, you know, the buyer information, the seller information. Again, also extremely important.
Guess what happens if you don't? They
Do
better- I said, because guess what happens if you don't? It shows up as all capital gains. whether
That's
or not you-
absolutely right.
And then you owe a huge.
And all of that is correctable, fixable,
Yeah,
but it's a pain. It's so much better to have it on the original return and have it accounted for. Because it's just not easy to deal with the IRS or the state or any government agency. So yes, very important. And again, we don't remember. I mean, I don't remember last week. But I mean, seriously, it's so, and time gets away from us. So what you think may have happened this last month may, you know, so just review your records, and you can always call the title company and say, hey, did I sell or buy anything this year? If you're having a lot of transactions and not sure. Also provide invoices, the business vehicle or equipment that has been traded. Even though you may have that you ended up having to write a check for $20,000 for that piece of equipment, the accountant has to see the entire picture. They've got to see what trade-in value you're provided. And that's not anywhere except for that paperwork. Please be prompt to answer questions for your accountant, and that helps everyone. And I know every business that has stressful times and are busy, but it's next level during February through April, and then again September and October. So if we are, I say we, I'm not doing this anymore, but if your accountant is working on your return and they need X, Y, and Z, and they send you an email, if you shoot that back to them as quick as possible, they're gonna keep working on your stuff. But if you send one piece today, another piece in 10 days, another piece in 30 days, it leaves room for error because we're picking it up and touching it. That means different times. And when we're working on the return, you're in it. You're focused on that. And if you're having to pick it up 5 different times, it's just harder to get back into it, if that makes sense. So just know the quicker you can provide things, the more complete you can provide things on the front end, the easier it's gonna be for everybody, the quicker. So, and your accountant, whoever your tax preparer, they kind of learn how you, respond, how you do business. So it kind of, I mean, this sounds bad, but it kind of gets to where if you're not worried about it, why should they be? So take care of business. And then we're to the planning for the next year. Setting goals, schedules, your budget, looking at that retirement insurance, getting those W-9s. On the setting schedules, that would be more internally as far as, I want to have my bank accounts reconciled by the 10th of the following month. So that's something more for you to work towards. And if you have it scheduled, you're gonna be more apt to actually do it. The scheduling appointments, tax season is a necessary time to meet with your accountant. But if you really want to understand your financials or your tax returns, or you have specific or detailed questions that don't have to be answered during tax season, it would be very appreciated by your accountant if you're able to schedule an appointment outside of tax season ahead of time to go over those things. Yeah. Any questions?
I have another question.
Yeah.
We have had several opportunities where we've been able to trade services with another business. For example, we do heating and air work, as you know, but, we traded heating and air services with a vinyl company. They're going to put vinyl on our fleet car for the business. Should that, obviously no money will be exchanged because it's even for even. Should that trade be documented somewhere within QuickBooks, or do we just,
Technically, yes.
okay?
It would be considered bartering. And bartering is supposed to be reported. Honestly, does it happen very often? Not really. But yes,
How is
technically
that
you
put
should.
in without a money? It's just put at zero value? And documented as a service? I'm sorry. this may be
No,
too-
you're
Hey, y'all may wanna talk off.
So it's super complicated, but we do national accounts, for like Goodyear and Firestone, so we work on fleets with them. And so, so we work on the fleet. The fleet pays Firestone or Goodyear, and then it's the amount, instead of being paid directly to us, is credited towards our hire account. So it pays off parts, it's like a credit. So we have to put ours in, let me try to think about this for a second. We have to put ours in as, Goodyear being, or the fleet account being, a customer. And then, trying to make sure I'm not talking wrong. And then we have a separate account.
Overall, you should be recording the value of what you have done and the value of what has been received. And if one is, if they're not equal, then it would technically be income to you.
So it's just reported credit memo.
Yeah.
You know, or something, and then, so then, when credit is applied to that bill or whatever, I still have to show that it moves from one account to another, even though it's just.
Non-actual money.
So even though there's not actual money, there is that value, and that technically is supposed to be accounted for. Like I said, I would say 9 times out of 10, they're like, no money change, nobody's gonna know. But technically, yes, that is supposed to be. While you mentioned that, just also know that if you were to donate services, that is not an expense. So if Lori donated her coaching services to a nonprofit, and that nonprofit, and your services would have typically been $5,000, she doesn't get to take a donation deduction for that 5,000. If she did, then she'd also have to put it in income, and it's gonna zero each other out. But a lot of times people will think, oh, well, I donated this service, so I get to take a deduction for what I would have charged, and it doesn't work that way. Other questions for Michelle? And I have SME hours here at AIC. It's
December 19th.
once, one day out of every month. So
Yep, she comes in for 2 hours and does 30-minute sessions.
So feel free to come talk with me, and again, please don't ever be intimidated or embarrassed about things that you may ask or things that you don't know, because we've all been there.
I was going through some of your reviews from your survey feedback, and someone's called it financial therapy. So that's what you're walking into. Financial therapy with Michelle. That's what we need to rebrand it. It's just financial therapy.
There were a lot of times with the practice, we would say, I feel like I'm a counselor as well, not just with finances, but overall.
But we go to arconnector.org, click entrepreneurship, and then click Connector Connect SME Network. That's where you'll click on Michelle's beautiful face, and then you'll book time with her. So that's where you can do that. So thank you guys so much for coming with us.
Thank you.
Um,
Thank you.